new episode of ET Smart Investor, where we talk all about your investments and more. I'm Neha Vashishth Mahajan, and today I have Mr. Kranthi Bathini with me. He's the equity strategist at Wealth Mills Securities. Thank you so much for joining us today, Mr. Kranthi.
Hi Neha, thanks for inviting me on your show to discuss my views with all the viewers of ET Markets.
Well, the pleasure is all mine. So, for the audience who's just joined today, our topic of discussion today will be around the geopolitical tensions that are going around in the world and specifically in the Middle East and its effects on the global markets. So, first of all, let's start with what happened over the weekend. Iran launched a drone missile attack on Israel. Now, we anticipated the markets to be unstable and it did go down about 800 points today. But although the markets recovered a little bit later today, how is the Middle East conflict going to affect the markets from now on?
Yeah. Uh, Hi Neha, looking at the current context, okay, market has not, for the market from the past 24 months have been roller coaster with respect to the geopolitical issues are concerned.
Hmm.
So
Right.
it's not something new to the market with respect to the geopolitical issues because market has been climbing these wall of worries. We have witnessed a bigger war in Ukraine, in Europe, between Ukraine and Russia, and the
Hmm.
war is still on. So market, despite of these kind of uh, worries, market has been climbing all these wall of worries. And 6 months back, again we witnessed the war between the Gaza Strip, between Israel and the Gaza, and market also experienced the turbulent kind of uh, times during these uh, uh, kind of geopolitical conflicts and war
Hmm.
kind of that prop ups. So this time it is something different because the because of the proximity and the significance of the conflict between Israel and the Iran, where Israel is in a direct attack with Israel. That's where the market has reacted in a negative
Hmm.
way. That's what it created the tremors across the globe in the financial markets. So we need to see how the things are going to pan out in the next couple of days. Whether Israel is going to be in a uh, escalation matrix. That means they are going to do any retaliatory attacks on Israel. So these are the things are because of the diplomatic nature at this point of time. There will
Hmm.
be kind of de-escalation in the region. We need to wait and
Hmm.
watch. But definitely, it is a cause of concern for the markets in the medium to short term because it's going to have its impact on one. The key thing is the sentiment and also
Hmm.
the prices of the crude oil and also the commodity prices. So
Right.
this is the key concern for the market. And India is a economy. Every dollar increase in the crude oil, it is going to
Hmm.
have impact on the market, impact on the economy, and also on the inflation. So that's where the Indian economy, in terms of the markets are concerned, uh, the current conflict is going to have impact, a direct impact on our economy because of the crude oil is concerned. Uh,
Hmm.
Coming to your point, Neha, currently we need to wait and watch next couple of days. Okay, how the things are going to, whether the things are going to de-escalate or escalate. That's where the point is right now. But crude, everybody need to watch. That's what in our earlier interactions also we have been
Hmm.
discussing about the crude. So
Right.
market has came down in the morning, but we can see a sharp recovery in the market. The buying interest is emerging, and we might see sharp declines in India in Indian markets. But due to the positive sentiment on Indian markets and also the growth prospects in Indian economy is concerned, we can witness a sharp rebound in Indian markets. That's what we have been witnessing in right now in Indian
Hmm.
markets.
Right. And as you mentioned about crude oil and the importance of crude right now and how it's going to affect the markets and economies, I want to understand that what are the levels that one need to watch out for crude oil? Is there any danger level out there that we need to take care of?
Yeah, Neha. With respect to the crude oil is concerned, if the crude oil is below $75 to $80, okay, that's where
Hmm.
the comfort level that gives. Below that is a more we can the OMCs and everyone have a under recovery process that happens. But
Hmm.
above 100 is the mark where everybody need to be cautious. But still, the current levels also on a higher levels, but anything below 75, 80, it's a comfort level. But anything above 100 is a red zone for the crude oil is concerned for Indian economy. It's going to have
Okay.
a very strong negative implication on the inflation and other data. It's going to definitely going to disturb the party mood of the
Hmm.
economy, uh, and the market also. So that's where we need to watch closely the movements of crude in the medium to short term.
All right. And actually, a lot of stocks are also are having an Israeli connection. So stocks like Adani Ports, Lupin, Sun Pharma, TCS, even Infosys have an Israeli connection. So, what is the suggestion for investors who are invested in these stocks? And these are just few names that I have taken, but apart from these names, a lot of stocks are also there that are connected to Israel in some way or the other. So, what is your suggestion to the investors who are there for short term or medium term, and people who are there for long term as well?
There might be some kind of short-term negative impact or on the sentiment, and also stock can give a knee-jerk reaction because the first and foremost is Adani ports have their port in Haifa. Uh,
Hmm.
uh, so there will be a sentimental impact on the stock in the medium to short term, but we need to see the things have been quite volatile in Israel from quite a long time.
Hmm.
So the current conflicts, how much impact it's going to create on their earnings, we need to wait and watch. But by and large, on prima facie, the data what we are getting, the impact will be very nominal, negligible in the medium to short term. If
Okay.
the conflicts are going to further escalate, we need to wait and watch. In the current the situation in Israel is volatile, but the attacks that were done by Iran, it's not
Hmm.
impacted any material damage to their establishments as on date. Neha. So
Hmm.
the impact will be very negative on the stocks and companies are concerned.
All right. Okay. So, before we conclude our session for today, one or two last things I want to discuss about is that first, how to go through markets this week and what to keep in mind. And second, if anything you would like to add about commodities that investors must know about, then that.
Yeah. Commodity stocks have been rallying strongly. The main
Hmm.
reason is one thing is the current conflict, what we discussed in our conversation, and also US and UK they have imposed a embargo on the Russian imports that are metals also metals are concerned. So Russia they produce a lot of steel, so that's going to have a bigger impact on the supply side. So the demand will be on a higher note, and supply will be there will be a problem. So that is the reason we can see the steel stocks have been rallying, um, and uh, uh, Russia has been one of the strong producer of titanium across the globe. So
Hmm.
uh, titanium is one of the key commodity which is the supply is very strong in the hands of Russians, and also
Hmm.
to expand the capacities. It's not an overnight thing to do increase the capacities. And
Hmm.
titanium is the metal which is used majorly in the aviation and defense is concerned. So one need to watch how these interesting moves are going to come. Currently, commodities are on boil right now. Uh,
Hmm.
but as far Indian markets are concerned, nothing to worry with respect to the increase in the prices of metals are concerned in the medium to short term. Uh, but how far the metal increase in the metal prices it's going to have impact on the capex cycle, that's what we need to wait and watch. But among the commodities basket, we need to clearly, as we mentioned always, clearly watch how the things are taking place with respect to crude is concerned in the medium to short
Hmm.
term.
All right. So before we close our session, I'm just going to take one or two questions from the audience and then we'll conclude our session. The first question is by Akhilesh Kumar. He's asking till when the market will fall because of this war.
Yeah, but see, these are the geopolitical issues. We don't know where the things are going to escalate over a period of time. But markets are
Hmm.
currently are going through a turbulent phase right now. But Neha, one thing is clear:
Hmm.
don't miss a opportunity of a dip in Indian markets. Whenever markets,
Yeah.
because the nature is external in nature, our economy is doing strong at this point of time. We are in the earning season. So far, the corporate earnings just started with TCS, and the results are quite good. There is a complete recovery with respect to the margins are concerned in TCS. So we
Hmm.
started at a good note. We need to see how the earnings of the company is going to pan out. By and large, the earnings are going to be strong traditionally because the Q4 numbers are going to be good in the medium to short term. So any dip on Indian market is a wonderful opportunity for the investors who want to invest for the longer term. There might be short-term bounces
Okay.
here and there in the market, but for the long term, the trend is in a positive trend. We are holding the level of 22,300 on Nifty also. So nothing to worry, nothing to panic. Okay, use these dips to accumulate good stocks in your portfolio.
All right. Okay. Krishna Pathak is asking, what do you think about Vodafone India move for FPO?
It's a quite a interesting move, and it's a positive move, raising the capital at this point of time. Uh, but we need to see how their business is going to strengthen over a period of time, because we need to
Hmm.
see the strength in the core business. That's where the company has been losing in the past few quarters. So
Yeah.
this FPO money helps the company to build uh, uh, their brand and also the consumer confidence. And if the numbers are going to go up with also with the ARPU is concerned, definitely we can see some kind of a rebound in Vodafone in the medium to long term.
All right. So I'm taking two questions, last two questions, and I'm basically collating them because they're similar. Mayur Gupta is asking, sir, is it time to buy HDFC Bank and other banking shares? And Sandeep Singh Gill is also asking about bank shares and asking about HDFC in particular.
Yeah, the credit growth in the previous quarter has been quite strong. The demand for credit also is very strong at this point of time, despite of the high interest rate environment. And with respect to HDFC Bank is concerned, there is a overhang on this merger, and how the merger fruits are going to reflect, when it's going to reflect in the company earnings. The bank is in a right track at this point of time, and
Hmm.
as we are entering into a cycle of credit expansion over a period of next couple of quarters, HDFC Bank is best positioned at this point of time. So there might be some kind of underperformance in the medium to short term, but the long term, the bank is well established. So if the investor have a long term horizon, definitely you can invest in HDFC Bank. The similar cases, I just want to refresh the memories of investor. Uh, ITC was not doing couple of years back in the same way. Those people who invested in ITC during that phases, they made a good amount of returns. Same case with the LIC. The stock as was after the listing, it's not haven't done anything for a year, and
Hmm.
many investors who bought with the confidence in the bottom end of that level, they made beautiful returns. The same case with HDFC. Okay, price changes the perception of the people. We have not witnessed any kind of strong returns in HDFC Bank in the past after the merger. But investors who have the